Hi, my name's Scott Dahl. Thank you for tuning in to another one of my podcasts. I've titled this The Magnetic Market because this is exactly what we've got in this trend channel that I'm going to show you. I showed you last time in the previous podcast. We're going to look at it here further. A couple of things I wanted to say is, first of all, everybody's excited about the new highs in the indices. Yeah, they're making new highs, and that's certainly not a negative, but what's happening is this sideways trend that we're going to look at once again is sucking the price back in. And that's what it does. It's like a magnet. It pulls the price back down and pulls the price into this sideways trend. The sideways trend can go on for a long period of time. More than likely, it will resolve itself to the upside because that's the direction of the previous trend, because we are indeed in a cyclical bull market. However, it can break out to the downside. Also, there's a lot of talk that breadth is good. I don't see breadth as being fantastic right now. That's one of the major concerns is the fact that breadth is not that good. I'm going to show you that as well. So let's get to the charts. And you see first I have up the Dow Jones Industrial Average. Take a look at this. It's a sideways trend. We tried to break out of it. We went up and we hit these highs and it's pulled us back down into the trend. If it breaches this 50-day moving average, well, we could go ahead and see these lows. I see no reason why we can't. But it's the same story on all of the pretty much all the markets. Here's the excitement, right? S&P made new all-time highs. Well, that's becoming, or it may be negated on this trade because we're pulling back down into the sideways channel. This is the Qs, the NASDAQ. NASDAQ looks a little brighter, right? 3 big days up. Green is an up day, red's a down day. But what's happening is the market is trying to bring it back down into the congestion phase. This is the brightest of all the charts that I'm going to show you if you're a bull and you're long this stock market. Right here we have the XLG. I brought that out last time. That's the largest 50 growth stocks in the S&P 500. Same story, stuck in the sideways trend. What do we got here? This is the NYSE. Same story, stuck back down in this sideways trend. And here, this is important. This is the advanced decline line of the New York Stock Exchange. I didn't bring this up last time. I'm going to bring it up now because what's happening is it's in a downtrend. So this breadth is decreasing. That's a potential negative sign because breadth peaked back here in November, December when we started that December swoon, and it has now recovered. We need to see a recovery in breadth for us to get out of this trend channel. So this is one of the bigger concerns that I believe I have. This is the small caps. Small caps have been in a sideways funk for about 6 months now. So we're in a sideways trend. Where are the bright spots? Well, here's one of them. So here's the bright spot that I see right now. This is from the American Association of Individual Investors. They poll the investors on a weekly basis to see if they're bullish or bearish or neutral. So if you take a look, you see that for the week ending 2/19, which was yesterday, the 29.2% of individual investors are bullish. That's compared with the historical average of 37.5. Then if you look at the bearish number, 40.5% of the investors, investing public that they polled, are bearish, and that's significantly higher than the historical average of 31%. Why is this a positive? Because individual investors get it wrong. They react emotionally to the news. That's the reason they buy at the tops when the news is incredibly euphoric, and they sell at the bottoms when the news is incredibly dismal because they react emotionally. So if they're bearish right now and we're in this bull market, that's a positive sign for the market. So we've got some mixed indicators, breadth being negative. That's a big concern. Breadth continues to roll over. That's going to weigh on this market. But then we've got an investor that's decidedly bearish, and that's a positive. So what's that mean? I think we're going to be stuck in this sideways trend for a while. Yeah, however, you can make money in this. You can make money if you pick the right asset classes, if you pick the right sectors, and if you pick the right stocks, you can make money in this market. I don't think buy and hold is going to work that well this year. I think more of an active approach is going to work. So if you want me to look at your portfolio to make sure you're allocated properly, I'd be more than happy to do that. You can reach me at 949-497-6366. It's dahlcapitaladvisors.com. Scott at dahlcapitaladvisors.com. You're watching Dahl Capital Insights. If you have any questions, give me a call. Thanks again for tuning into my podcast. I greatly appreciate it. I look forward to doing more of these in the future. Thank you.